more on the Exxon XTO deal. Joining us now is Kevin Book. He's managing director at Clearview Energy Partners, and Clearview provides corporate and financial clients with energy sector analysis. So, Kevin, we just heard, obviously, the background on this deal. It seems as though Exxon Mobil is making a bet here on natural gas. Do you think that's the right strategy to take?
Well, I think they're doing two things. That is certainly one of them. But the other is that they're doing an acquisition in a very Exxon fashion. Right now, the natural gas price has been very weak for a long time, and these companies, a lot of them are probably heading to the block for a variety of reasons. They're buying an asset that is probably going to only appreciate, and they're doing it at a time when they can use the stock they've been diligently buying back to advantage.
So what then do they do to best sort of integrate XTO and use it to their advantage?
There's a couple of different places it could play into Exxon's overall strategy. First, there's the North American demand picture for gasoline. Right about now, if you're an oily company like Exxon, you probably want to get, if you'll pardon the phrase, gassier, because North America right now is going to plateau and eventually trough off and begin to decline for gasoline. The other side of it, though, is that shale formations exist in other countries. So if you're Exxon and you're thinking about where you can find low-cost, vast resources, buying one of the pioneers moving into the Barnett and Woodford shales like XTO is perhaps a great way to acquire the technology and expertise to perhaps move to Europe and some of the other theaters overseas.
Kevin, Exxon doesn't have a problem increasing its exposure to the natural gas market, does it?
No, right about now, it's probably one of the better things they can do to balance some of the overhang on crude and gasoline.
Are we going to see some similar transactions? Will people be following Exxon?
It's expected that you'd get at least a few more companies for sale under ordinary conditions, and there is a fairly major policy change that's been discussed. It's repealing the intangible drilling cost deduction, which has been enforced for the better part of a century. That's a major way these natural gas-heavy E&P companies fund their production activities. If that tax change takes place, you'll see a lot of these companies up for sale.
And how likely is that that's going to take place, and if so, when is it going to happen?
It probably wouldn't happen before the second quarter, Julie, and it's something that the Obama administration has clearly articulated as a goal. It only takes 51 Senate votes for it to happen. It's still potentially going to wall off part of the industry and protect them from this. But again, this is the sort of thing where if you've been running on fumes, again, pardon the puns, because you've had a weak commodity price for a while, having something that damages your ability to source working capital could put you up for sale a lot sooner.
Kevin, you just heard Sue talking about some of the potential acquisition candidates. We have so many of these stocks doing well today: Southwestern, Chesapeake, Devon on the rise. Now, among all of these, which are the most likely candidates to perhaps be next?
Well, I think you have to start looking at the cash position. Devon, for example, recently said, look, we're going to concentrate on our lower 48 gas business and divest ourselves from our overseas production, get out of the Gulf of Mexico. Folks who are shoring up their balance sheet are going to be harder to wrestle down if you're one of the big Goliaths out there.
Kevin, taking a bigger picture look at this, what is this telling us about corporate M&A in the exploration and production sector? Is this a sense that folks are starting to see things in the economy turning around and they're willing to take on a risk like this?
I'm not entirely sure that this looks as rosy as all that. I'd like to think so, but perhaps it's better to think of this as the way that a big pharmaceutical company might pick up a biotech with something innovative.
Right.
There's been a lot of risk-taking going on in the E&P space, bringing down the cost of this hydraulic fracturing and unconventional gas production. Now's the time when they want to effectively exit their investment, and it's a perfect time for the big companies to reap.
One of the things we've also been hearing potentially is that Exxon Mobil here is saying costs are going to be rising for things like coal, especially if, say, cap and trade passes, and then natural gas is a good alternative. Do you think that is a good bet for Exxon to be making?
I think it's a sensible bet to make in general, given in the last 15 years, natural gas as a percentage of our generation mix has gone up about 6.5%, and coal has gone down about 2.5%. But it's more a question of science versus politics. On a science basis, yes, natural gas generation is cleaner from a climate perspective, but 2 of the 3 bills that have recently shown up on the Hill essentially give a significant portion of free emissions permits to coal-fired utilities. So it may be a longer-term bet, and of course, that's a very Exxon kind of thing to do as well.
Well, and speaking of longer-term bet, I mean, natural gas, one of the few commodities that has not participated in this recent boom. So is that going to turn around anytime soon?
Well, it could turn around potentially in the worst of all possible ways if there's restrictions on using the technology that XTO, Devon, and others have been able to use successfully to fracture underground seams to free up the unconventional gas from shale. But the long-term decoupling of natural gas and oil has been basically broken and will stay so as long as oil stays global and gas local. You're getting essentially bargain basement BTUs.
And Kevin, in about 20 seconds, so can we say at least going forward that some of those companies that will be acquired are the major oil companies that are having problems increasing production?
Well, they aren't necessarily having problems increasing production per se. They're having problems increasing production at a price they can afford.
Right.
These are cheap BTUs they can get, and they can get them to a market that wants them. That's a good bet.
Kevin Book, Clearview Energy Partners, joining us from Washington. Kevin, thanks.